Hey there, boo-boo. You got to get the pips from the pip basket. Morning, everybody. How you doing? It's a Monday. I'm sorry to say, but you know what the best part of Monday is? Lots of trading. Ha ha ha. Because you got Monday and like Tuesday and Wednesday and totally Thursday. And then Friday, whoop, whoop. So that's always good. So hopefully the market giveth this week. Remember, you make money when the market giveth. You don't make as much money when the market taketh away. So it's never your brilliance that's in control of how much money you make. Which is a good thing to be reminded. Let me also remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. What's your name? Tristan says, Friday's webinar was epic. Yeah, sweet. We had an epic one last week, the week before, too, didn't we? I don't know, whatever. Every day is epic. Every day is epic. that would be a kick butt t-shirt though, hey Ryan? Every day is epic. Nice. Yeah. In small print, so go F yourself. Anyways, hey, good morning. My name is Wayne McDonell. I'm the Chief FX Market Strategist of TradersWay.com. We're a little boutique ECN that would like to earn your respect and loyalty, help you become a successful Forex trader over time. And when you are ready to trade real money, we'd like to become the prime broker for your successful Forex trading business, and that you trade successfully and profitably for years and years and years and years, slowly grow your lot size, slowly grow your assets under management. You win, 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 and we win. Sounds good. So that's where we want to go. That's our paradise. If you believe in that paradise, put your diamonds in the sky. We do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. Except the first Friday of the month, that's reserved for Trade Non-Farm Payrolls Live, which is a webinar I've been hosting at FX Street for just about 12 years. Henley says 138. So for 138 months in a row. Cool. That's interesting. Right on. Thanks, Anthony. That's pretty funny. There you go. Yeah, 138 months in a row is definitely a trend, and it's something I like to do. Why not? So once again, thank you for being clients of Traders Way. We appreciate you. We work hard for you. You're the boss. And I'm trying to get us over here. Do you see Forex.Today? Sir, yes, sir. Drop into 1 minute, get me 20 pips. Sir, yes, sir. Yeah. It's Monday. My hormones always go crazy on Mondays. Have you had more than 4 hours sleep? If you have, you should be ashamed. Whew, so I'm like, yeah. In the last 3 days, there you go, TJ. All right, so let's go through the calendar. I'm just a little bit dizzy. So bear with me here. Got to get my drawing pen out. And all right. All right. All right. Sorry, just drawing tool. All right, good. Sweet. So here's the calendar for Z week. And I have it set for medium. I have it set for medium and high events only, high impact events only, no low. Go through here. Manufacturing data of the United States. Fine. Great. Not that amazing. We're a service economy in the United States, but manufacturing is important. Manufacturing suffers usually when you have a high dollar. It benefits when there's a weak dollar. So it's something that's watched, something that's tracked. I think we're pretty much on trend, right? Remember, it's when we're off trend that it's important. And also, if we're on or off trend, it's most important when it forces or could lead to influencing the said central bank into a new policy. So let me ask you something. Even if ISM manufacturing data was a surprise, will it force the Fed to act differently than what we've already priced in? Well, it would have to be huge upside, and even then, probably not. Now, a big low number could make a lot of people say that, hey, man, the Fed couldn't raise interest rates in December, right? But it would have to be very significant one way or the other. So if the Fed has been hinting they're going to do it, they're going to do it. That's that. So it has to be like catastrophically bad for them to not do it. And it would have to be just shockingly good to make them be even more hawkish. And both of those are extremely unlikely. So that's why a lot of these things I get all poo-poo about, because I'm like, well, look, lots of people hype these things up, and they are important. It's important data, but we know the trend, and it's very much likely to be about the trend, and the price, the trend is already priced in. So if it pops 30 pips, okay, maybe you'll pick up a 30 pip scalp, but it's not going to change anything fundamentally, most likely. Okay. Now I want to point these out. We had a lot of FOMC members speaking. I think it was last week, wasn't it, or the week before? There were like 15 speeches. Well, that's because they're. Yeah, was it last week? That's because they're letting everybody know that they're going to raise interest rates and that they're going to trim the balance sheet in October. Okay, so that's what that's all about. Kaplan, is he out of Atlanta? I forget where he's from, but he's pretty smart. New home sales out of Australia. That's interesting because the RBA is always worried about a bubble. And then interest rate decisions out of the RBA. Sweet! Dallas. Cool. Thank you. He's smart, though. I've seen a few speeches of his. I've seen him talk, do a few interviews and stuff on CNBC and Bloomberg and stuff. So, but obviously, RBA, interesting. So, are you going to front run it by trading it now? Are they going to cut interest rates? Are they going to keep interest rates the same or raise? So, you know, could they keep them the same but say good things? Well, that's the same thing as doing something. It's right on hold, but I mean, like, let's like where in the world is having trouble? Europe is improving significantly. The United States is actually raising interest rates. So on and so forth, right? Is China on board yet? Well, if Europe is on board and the United States is on board, China's next. Now, you may remember having this conversation like literally 5 years ago. But I said the United States would recover and that China, instead of stimulating its own economy, should take all their money and save Europe. Because if they save Europe, then they buy more stuff from China, and the United States is already likely to buy more stuff from China, then China would be saved. And then China is going to need natural resources from places like Australia. So then Australia is saved. Right? Ryan says just last January it was totally different. That's what the media was saying, right? With all the fake news. Remember Trump's fake news? But yeah, like it was like not working. I can't even remember what their excuse was. Like, no, we're all in serious trouble. And I'm like, really? Where in the economic data do we see serious trouble? What happens though is you have seasonality, right? And maybe it had to do with the Trump effect, but that was funny, right? The bounce or whatever they called it, the Trump rally. I mean, that was funny. It was so stupid. But I remember talking about that with you guys too. I'm like, that is just stupid. It's not Trump's fault, but to think that he's going to come in and change the world, that's what Obama thought. That's what Clinton thought. Like, that's what everybody thinks. I think being president of the United States is probably the most frustrating job in the world. So anyways, there's no way he's going to walk in and change the world, right? And if you can have a chance of changing the world, it's not going to be in the first 6 months. Come on, all right? Like, it was so stupid. Even if you had $1 trillion worth of shovel-ready projects, that money's not going to hit the real economy for like years. So anyways, whatever. So we're all looking backwards. It doesn't matter, but it's funny. So where are we now? Oh yeah, RBA. So they may not raise interest rates. Let's say the most likely won't raise interest rates, but they can start talking about things improving. But Canada's raising, the United States is raising and trimming. Europe's next, right? Adam says trying to cut the reserve requirement ratio. Yeah, which is pretty typical for them, right? They do that a lot. But that shows that there's less need for stimulus, which is what points it out, right? So somewhere along the line, Australia's next. Now, is Australia still running a deficit or a surplus in their import-exports? It's 10%, PJK. Come on, PJK. That's right in the fundy scores, bro. Come on, Bubba. Went over R plus E. Come on, Bubba. No, it hasn't changed since I think 1992. Yeah. So Ryan says Australia has moved into a slight surplus, which is good, right? Because a year ago and 2 years ago, I remember talking about this, like, this is a really odd thing for Australia to be importing more than they export. But now they're back to doing what they should be doing, exporting more than they import. So, there should be an increase in demand for the Australian dollar. Now, maybe it's break even right now, right? Slight positive, but let's just call it just past break even. But just past break even is significantly better than deficit. I'll give you an example. Hold your breath underwater for a minute. And then pop your head just into the air. Just an inch. Your chin is just an inch above the water. Now see if there's a difference. Now, it may only be a 2 or 3 inch difference, but it's a big difference to have error. Well, we're talking about economy now. There's a big difference between having a little bit of money and borrowing. Making a little bit of money, borrowing. Right? So, and it's not even the deficit part. It's the idea that if they're exporting more than they're importing, then there's more demand for Aussie dollars than there is supply. Right? Now, how about this? Is it a shift along the demand curve, or does the demand curve itself shift? Oh, snap. So this is good stuff. Pay attention, right? Some Euro news. Great, blah, blah, blah. Wednesday. Should we pay attention to the ECB meeting? Yeah, why not? What are the issues? The end of extraordinary surplus, the end of QE, the end of something, right? The ECB, would they talk about Brexit? No. But anyways, read it. Okay, read it. That's it. Read it. Boop, 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 boop. Yep, that's going to be important. Inflation report. Jitterbugs at the Bank of England. It's nice. That's what you want to read. It's another good one. Now, this is an interesting thing because, right, this is an interesting thing because there's two types of inflation, right? Are prices up because demand is up, or are prices up because supply is up? Okay. Venezuela has high inflation. Is that good? Is it demand for Venezuelan oil, let's say? Or is there inflation from an oversupply of money? So Germany and Austria after World War I paid all their debts by printing money. And it got to the point where you needed a wheelbarrow full of money to buy a loaf of bread. Right? Is that good? 9! Yeah. Well, we saw that coming years ago. I'm telling you, if I had time, I'm thinking Venezuela is going to be a nice place to visit soon. Yes, sorry, Ryan. I just ran out of coffee cups. I just had like 15 empty coffee cups, all moldy and stuff, sitting on my desk, and I'm like, oh my God. So now I'm drinking out of tiny glasses, tiny normal size glasses, but check this out. You guys know this cup, right? Yeah, you know it. Yeah. Old school. Hoorah! That's old school. I mean, I've had these things for like 15 years or something. So anyway, but I don't have time to like go, like who has a minute? It takes me a minute to walk to the other side of the house. Who has time for that? So I just loaded up here. So anyways, yeah. UK inflation report. Read it. Carney is a wonderful writer. So anyways, yeah, what was I saying? Yeah, time to fly to Venezuela with your checkbook. Getting pretty close, I think. Anthony, are you wearing your wife's bathrobe too? Like, ooh, wow, really? This feels so nice. It's so soft. And these high heels. It's not as bad as I thought. Yeah. Yeah, that just got weird. All right, so ADP. Yes, smells of lavender. Yeah. So, ADP. Yep. ADP, another dumb prediction. Mini payrolls is simply going to, I think, where we were traditionally, and that is that there's very little, in fact, no correlation between ADP and NFP, which is cool because that's historically what it should be. The last 8 years might seem like forever to you, but for me, the 8 years is recent. So in the recent history of the last 8 years, the correlation between NFP and ADP has been high, probably perfect correlation, solid 1, right? Perfect positive correlation. But it's not supposed to be. Historically, it hasn't been. And I think the correlation is breaking down because the market is more normalized now. I think actually a good thing. Now, how many people have done the fundamentals course where Kurt Worley takes you through, positive, negative correlation and the factor of R? It's great, right? And he's so jazzed, right? He's so jazzed when he does it. Kurt's great. Goes all the way back to Galileo, wasn't it? Wasn't it something like that? He's so jazzed and happy about it. So the funny thing about that presentation, I mean, that's a recorded webinar, but the very first time I took FX Bootcamp with all the other coaches and stuff to a conference, we set up things called booth-in-ars, and we set up these booths in the middle of the trade show because I tried to talk to the trade show people. They're like, hey, will you speak? And I had spoken at all these events for years. And I'm like, I want you to give me a room where I could just talk for 12 hours a day. And they're like, you can't do that. So I'm like, well, I'll pay for a booth. So I paid for a booth, and we just did webinars out of the booth. It was great, and Kurt did that. And I still have these memories where Kurt's up there and he's explaining R and all this kind of stuff, and 1 + 1 isn't equal to, and 1 + 1, and there's just like 100 people surrounded him. And the rest, and I'm not joking, the rest of the trade show, ghost town. We had people, salespeople from the other booths sitting there watching Kurt teach him about correlation. It was just great. Good times. That's how you do it. And that when you do things like that, it's really funny because it's like you two sitting in the audience singing, right? With the audience. There's no stage, right? You're there. One time I was at a trade show I think IBFX had paid me to do a webinar in their booth to attract people to their booth. So I'm doing this presentation. I got the presentation behind me. I'm talking to people, and this woman walks right next to me. I'm standing there, and there's a fake plant because they put up like a little fake stage, little plant and stuff, and a TV behind me. And the woman comes right up and vomits into the plant next to me as I'm speaking, and just blah blah. Like, okay, so speaking about the 55 EMA, good times, good times. I'm a horrible writer and a horrible speaker. So ADP is a scalp opportunity. Pick up 20, 30 pips. You should be good. Okay. ISM services, great, better opportunity. Plus, we get it before non-farm payrolls. So we get manufacturing, we get services, we get ADP, we get Challenger Christmas and Gray. We got a full model for NFP, yo. Yeah. Yeah, Chuck, when I was in China, I got a speaking award there at the China Expo a few years ago with Dan. They had some sort of bar at certain times of the day. They would just start pouring booze. They had like funky Chinese whiskeys and stuff, but I didn't have time, man. I didn't have time. I never hung out, never had a drink. I know, really boring. What a worker bee. So anyways, ISM services, boom, 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 boom. This is great. That completes our model. But that's also important because now we're talking about the health of 70% of the entire economy. Tucker, yes. You can get the model. I released it at FX Street like 3 years ago. I went line by line by line by line. And then they did an expanded version, which is basically 80% of everything that I said. But then they took that and put some other people's input in it, and then documented the whole thing beautifully, right? So they took like a 3-page article and turned it into a 30-page report, which is pretty cool. So you can get it there. But it's pretty much exactly the feedback that I wrote for FX Street 3 years ago. Okay. All right, and then here we go, right into Aussie trade balance. And that's what we're talking about earlier. The trade balance is important because it affects supply and demand for money. Oh, is that the original one? Thank you, Ryan. So read that. Look at the date. On their old website, it had something like 300 likes or something. Read that and then search FX Street to get the more detailed one. They'll probably release it right on Friday, a new link or promote it. And they've taken it and they really did expand on it in beautiful ways. But I'm not sure what the other speakers contributed, but I haven't read the whole thing, but you know, whatever. It's good. It's good. So, oh, and retail sales. Boom. I mean, all of this is good, right? I mean, look at that. Aussie Wednesday / Thursday. I think the Aussie dollar is going to move this week. What do you think? I don't know, Brandon. There's been a Spanish independence thing for as long as I can remember. The Catalonians won out, but the Basque won out, don't they? So I don't know. I don't know. But I can tell you, like, Catalonia has got, what, 90% of the money in Spain? I don't know. I'm not involved. Ask Francesc, the CEO or former CEO, the founder of FX Street. We were at dinner at like an 800-year-old farmhouse in just outside of Barcelona, in the hills of Barcelona. And I said something to Francesc. He's like, he's making a thing. He's like, here, you got to try this. This is local. And I took a bite. I'm like, oh, this is really good. Everybody knows Spanish food is good. And he's like, this is not Spanish food. Yeah. This is Catalonian. He almost like stabbed me right there. I'm like, holy shit. Okay, this Catalonian. Yeah, this Catalonian food. Oh, everybody knows it's better than Spanish food. So there's no joke though. So Catalonians are Catalonians. They're not Spanish. Yeah. It was good. Good times. ECB, blah, 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 blah. Yeah, that's going to be important. Trade balance of the U.S., sure. So remember the interesting thing, like running a trade deficit in the United States, in my humble opinion, is good. And the worse it is, the gooder it gets. And we don't need to go in it now, but I would like to see a huge, ginormous deficit. And that would weaken the dollar. Yeah. But I want that. Right? Australia should have a strong dollar because they're exporting. Jeremy, I mean, sure. I mean, it's just that it's under demand. But whatever. Just think of it like when Americans are rich, they need to spend money. Think of it this way. Should a billionaire vacuum his or her house? No. Why? Wouldn't it be better to pay something? Wouldn't somebody be happier to vacuum a billionaire's house? Here's some money. They're like, oh my God, this is good money. I need this money. No. Look, if you got money, you got to spread it around. Right? I think Guy Kawasaki says, eat like a bird, poop like an elephant. So if you got good shit, spread it around. It's important to the rest of the ecosystem. It really is. So a billionaire vacuuming his own house to save money is just stupid. Okay? You should pay people money, put money into the economy. So what if America was the billionaire and some other developing country is the person looking for work? Hey, I can clean your house, I can do gardening, I can do grocery shopping for you, I can drive you around, whatever. Like I need the work, right? I need the work. And the billionaire says, well, it's cheaper than hiring myself to vacuum, right? I make so much more money with my time doing other things. So if America then can go somewhere else and buy labor for cheap, buy product for cheaper than they can do it themselves, then that means their time is valuable, and they transfer the excess value to somebody else. And that's good for the somebody else because now they have money. Because let me tell you, when you don't have money, life kind of sucks. Right? So that's why it's good. Yeah, you know it well, right? I get it. I got it. I know it sucks. I get it. I got it. I know it sucks. So, that's what you want. You want to spread the money around. By the way, this is why poor countries often stay poor for a very long time, if not into, perpetuity, perpetually poor, right? So a poor country, when you give a poor person in a poor country money, they stick it under their mattress or in a coffee cup in a fridge. And it doesn't go into a bank. It doesn't grow. They don't invest into the stock market and grow it. And when you invest in the stock market or whatever, I mean, it just sits there. It doesn't multiply, right? It doesn't get put into the real economy and grow. Poor people spend money, right? Money multiplier. Poor people spend money. I think there's a Conway West quote somewhere. Does anyone know it? Yeah, and also the velocity in which it is spent and churned, right? That's what the velocity is. How many times does a dollar turn over? I give you $1 and you go to the store and give it to the store, and the store gives it to the employee. The employee buys some candy, and cycle. But anyways, poor people spend money. Rich people invest money and make more money. And then they invest that money and make more money on top of the money that they made because they invested their money. And that money gets reinvested. And through either their own direct investment or through intermediaries, but it gets cycled. But then now there's money available to the entire economy. Banks are lending money to your neighbors so that they can improve their house. And they're lending money to a builder just outside of town so they can build a brand new house. They're lending it to small businesses so they can hire a few more people, and those few more people have jobs, have to pay rent to the local housing area. They go to the local grocery store and buy groceries. They also bank. They go to restaurants from time to time. They also pay someone to mow their lawn because they're working. So now they pay someone to mow their lawn, and it just multiplies. A poor person in a poor country, it just sits there, does nothing, and nobody benefits. It's pretty amazing. And remember, economics is a study of society. It's not finance. What is finance? Finance is a study of the flow of funds, right? Economics is a social science. How much does supply and demand impact human behavior? It's a very, very interesting thing to study, right? It's really cool. If anything, I hope I get you guys excited about economics. Okay, IVPMI, that's a CAD mover. Pay attention to that. And then Friday, for payrolls. That one might be complicated for me. I have one of these things where I might have to jump on an airplane any moment. Don't know if I'm going, but I might have to go now. And it would be probably pretty close to Friday. Actually, you know what? I have a trip coming up that weekend. All right, so I'm living a very complicated life. All right, good. So anyways, NFP, yada, yada, yada. Canadian NFP, yada, yada, yada. Baker Hughes rig count, great, great, great. China PMI over the weekend. So a nice little week we got together. The butcher, the baker, and the brewer. Yeah. I should probably post the image. I think I sent that to you, right, Ryan? Trying to remember the story. Was it you? Yeah, yeah. So I think you texted me or something. Ryan's like, "Hey man, I got a question. What are you up to?" And I'm like, "Oh, I'm reading an original copy of Adam Smith's Wealth of Nations. I'm sitting here right now, with my white gloves on. Check it out." And he's like, "Oh, never mind." Yeah. Yeah, it was cool. So I've read the original copy, printed in 1776. It's great. Harvard has this little tiny library. It looks like a small house. Beautiful though, not like, beautiful, but it's small. No joke. It's a small building, tiny, next to these ginormous libraries that Harvard has. It's just this small little thing. So I walk in there one day. I'm like, "So what is this place? Like a museum?" And they're like, "Oh, it's a rare book collection for Harvard University." I'm like, "Wait, this is the rare stuff?" "Yeah." I'm like, "So can you get a tour? I'd love to see some of these old books." And they're like, "Are you a degree student?" I'm like, "Yeah, I'm a graduate degree student. Here's my ID." And they're like, "Oh yeah, you can just check out a book." I'm like, wait. Are you telling me you have a 1,000-year-old book in there and I can just check it out? They're like, "Well, we got books older than that, but sure. What do you want to read?" What? You can have anything you want. Snap. Yeah, it's totally. I'm like, but they're like, "Oh, but there's rules, you have to be trained, you got to get permits, and you get all this stuff that like most people just back off." And I'm like, "I need a permit?" You're like, "Yeah, you need to be permitted." Okay, good. What do I need to do? So I got a permit. So I'm back there the next day, and I get through security, and and then there's another level of security. There's even like you got to go to a door, and someone on the other side has to buzz you in, and they let you in, and then you sit down. And so I go to the guy, like, "Hey, so what can I get?" And he leans forward. "You can get anything you want." I'm like, I love Harvard, right? So I'm like, "Well, this place is tiny. Where are all the books?" And they're like, "It's 8 stories straight down into a vault. Down, 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 down. You go to the computer, you type in what you want, you hand it to the guy, he puts on some white gloves, and he goes down the spiral staircase down into the depths of hell. I mean Harvard." So I'm like, "Oh, what am I gonna get? What would you put, right?" I'm studying economics. I had just recently read Wealth of Nations. I know, it's just funny, right? So I'm like, how about Adam Smith's Wealth of Nations? And they're like, "Yeah." Librarian goes, "Doo, doo, doo, doo." "Yeah, well, we got the original copy from 1776. "Yeah, that's what I want." Okay. So anyways, they come back and they put it in front of me, and I had to be trained. There's ways of turning the paper, and you're not supposed to touch anything, but you can turn it. I'm just reading it, like turning the pages, reading it on my own. No one looking over my shoulder. Boo, 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 boo. My permits here to read. I had another permit to take a picture. So anyways, I'm reading Wealth of Nations, the brewer, the baker, the candlestick maker. And then Ryan's like, "Hey, what's up?" Like, dude, Ryan. But I had the permit, so I'm like, hey, check it out. This is what I'm reading right now. Boom. So I was reading the one about money. There's a whole section on money, and I'm like, love it. Yeah, no, I actually had to have a permit to take a photo of the book. So I had a permit. I had two permits, one to read and one to take a photograph. And they put them there because so people don't freak out. So, anyways, that's why you guys should go to Harvard. Fun things like that. You should do it. You should go. Yeah, well, John says Harry Potter stuff. So my buddy hears about it. So I tell him, right? So he goes back and he checks out 3 books where the covers are made from human skin. I'm like, what? Yeah. Okay. Yeah, great. Good reads. Yeah, okay. Sorry, John. But anyways, in the Wealth of Nations, there's a lot to do with modern economics, and there is the section I wrote. I went to immediately had to do with money. It's very interesting stuff, right? Doesn't hurt to be educated. All right, you got to remember, I'm doing this when I'm 44, so right? Yeah, Chuck didn't seem to work. Too much going on dollar flow, huh? All right, so checking in here, you can see. Yeah, okay, so I'm just going back to what we talked about this last week. Remember, we talked about this, and then we measured from the top line, top of the range to the bottom of the range, project the breakout into here. Remember that? That seemed to work out pretty well. And it seems like the step down is still continuing, right? Right? Breakout, pull back, sell, right? Range it again, then gone. Question is it going to do something like that? It's hard to imagine it now, but time can do a lot. Okay. Cool though, right? All right, where'd my mouse go? Hello, mouse. Oh, there it is. Delete. All right. So, what do you think about this? What do you think about that? See, right now, we're here. It's just fallen for what? 2 weeks, 3 weeks, 2 weeks? Is it going to fall forever? Or are you going to prepare to hike north again? Okay. So let's take a look. I want to look at this on its own. Okay. So this is what we're talking about right now. Where is it? No, there it is. Pretty close, but anyways, let's get it accurate. Try to get this as straight as possible, but it seems pretty good. Like you take this line here, which is the price, you know, it looks like it's to the pip right now. Okay. So if this was a monthly swing, we know that it could actually fall a little further, and we should probably keep this one in mind as well. Don't you think? Maybe it kicks off the 4-hour 200. Maybe it's the daily 55. But even then, daily 55 says up to, I would guess, MR1. So do you think it'll drop all the way to MS1? Hopefully not. So let's say it kicks off the daily 55 and flops around. We only make it to 137.33. It's only 500 pips. Okay. Yeah, if you're bearish, that the other setup, I assumed you knew was a bullish setup. But if you have the bearish setup, which is just as legitimate, you're thinking there to there. That's cool too. Yeah, and Peter's like bullish on the pound. I just don't know. Yeah, well, there you go. So it's just like what you think. So very often, though, amateurs will say the economy is bad, so the currency is weak, which is just not true, depending on the economy, of course. When the U.S. economy is pathetic, the dollar's strong. When the Japanese economy is pathetic, the yen is strong. For example, those are two classic examples. When the U.S. economy is fantastic, the dollar is weak. When the Japanese economy is fantastic, the yen is weak. All right. So you can't say UK economy bad, pound weak. It's not always like that. So you got to be careful. So if inflation is high in England, or sorry, well, the United Kingdom, because of a weak British pound, what is the primary job of the Bank of England? What is it that they're there to do? What is their mandate? Handle inflation. That's it. Well, Ryan and some others, it looks like you're doing the Fed dual mandate. Not every central bank has dual mandate. So like ECB, for example, their job is to control inflation. Is it their problem if there's, you know, deflation in Germany and inflation in Spain? Is it their problem? No, they don't give a damn about that. It's not their problem. That it's Spain's problem that they have inflation. It's Spain's problem that they have 25% unemployment. It's not an ECB problem, right? So you got to be careful on their mandates. So the ECB doesn't even think twice about that. That's why they have their own independent government, Spain, right? Or Portugal, or Ireland. But that's how that central bank was put up. Yes. Okay, but but the primary, what is the primary mandate? Inflation. So my point is, if there's inflation because of a weak currency, it's not necessarily a good thing for them. Okay? If you have a weak currency because you have a good economy, that is different than just having a weak currency. Okay? And London is a place to store money. So they don't like it that money's leaving, right? So anyways, I'm suggesting that the Bank of England cares, and that this is a problem, that they would like to address it because it's their job, right? And it's the action and the timing of the action that the market expects that will dictate whether the pound is weak or strong. And you might say something like, oh, well, if you look at this economic data and that economic data shows things are bad. But that's not the issue. Okay? So that's why I say things like, oh, well, do some research. How about, literally go to the Bank of England website and start downloading some things. What kind of language are they using? What kind of bullet points are they posting? What kind of charts are up there? Just start getting into it and certainly separate news away from it. Don't let talking heads tell you about what the pound should or should not do. Don't ever pay attention to that. Then what you should do is separate economic data, which is current trend, and you got to be forward looking. So based on the economic data and let's say the value of the pound and the impact on the economy, which will be seen in the economic data, what is the Bank of England likely to do to combat that, and when? So you got to be forward looking. This is why I tell you, you have to have a 6-month and 12-month outlook. You might have to have a 3-year outlook even. Okay? So Paul says, so they will go before the Fed. Essentially, the Fed's already going. They've already told you. Right? And when they start trimming their balance sheet. So for example, what is the yield on the 10-year T-note? Well, hang on, let me pull this up. 10-year T-note yield chart. Hang on. CME group. That should be fine. Hang on, let me tell you. Let's see if this. Let me find a good chart. Hang on a second. This should do it. Let's see. So let's go 3 months. Or even 1 month. Shoot. Yeah, there we go. Those are interest rates. It's not Fed funds rate. It's the yield on the 10-year T-note. Now, I told you I was going to access this when it hit 2.1, right? I think I blurted it out one time. I'm like, I think this is changing. So there was, interest rates were falling. Okay, during this period, I think I talked about it. I said I was going to monetize. So anyways, I did right in here. No joke. And back that way. So this is actually now, since the beginning of September to now, interest rates rising in the United States. It just happens to be a 10-year T-note. It's not the Fed coming in with open market operations, but the Fed has told us that the bond market's going to fall. And when bond market falls, the yield goes up. So if you reverse this, if you looked at the price of these bonds and these treasuries, the prices are actually falling. So the Fed has told us they're going to come in next month, or actually now this month, in October, and start selling their bonds, selling their portfolio. Increased supply. Demand, let's say, at least demand is constant, increase in supply, price falls, rates rise. So it's the same or very, very similar to the Fed raising interest rates. So if they trim their balance sheet, right? You guys want to go into a quick lecture? Okay. This is the price of bonds. Okay. This is the quantity of the bonds. So let's say in the month of August you had pretty steady demand and you had a pretty steady supply. Okay. And what that did was create a price and create a quantity. That's the equilibrium. Okay. So the Fed has told us in the month, in this month, in the month of October, they're going to sell bonds. So the quantity, this goes from like 0, this goes to infinity, let's say, right? So quantity increasing is this way. So that means you shift the curve. You don't go along the curve, you shift the curve. And you get the new supply of bonds in the market, because now, let's say everyone else selling bonds, but now the Fed is selling bonds too. So you get an increase of supply. And that creates what? P2 and a Q2. Okay? That means there's been from Q1 to Q2 an increase in the quantity of bonds. So Q goes up. We go from P1 to P2. So the price of bonds goes down. What's the relationship between price and yield, or the interest rate paid? When price falls, there's an inverse relationship between price and the interest rate. So interest rates have gone up. The Fed comes into the market, increases the supply of bonds, supply falls, interest rates rise. Okay? So the Fed said they're going to raise interest rates, which are OMOs. That's an open market operation. But they're also going to trim their balance sheet. And that means dumping bonds onto the open market, meaning there's more bonds, more supply of bonds, because you have the Fed selling their bonds plus everyone else selling their bonds. There's more bonds because the Fed's entering the market dumping bonds on the market, driving prices down and rates up. Okay, so anyways, we're at some key levels here, weekly and monthly pivots and all that kind of stuff. If you were a bull on pound, cool, I'd pay attention. That's all I'm saying. The fact that it's straight down doesn't change your mind if you're a bull. You just look for the next level of support and look for reversal patterns. Okay? But at some point, you know, selling at the monthly M1 seems like not the right thing to do. All right, let's burn through some of these things. I broke even on the peso. I think I dumped it. I don't even remember where. I thought we had, I guess we had monthly pivots or something last week, and now they've updated. I think this was like a monthly reversal. So I dumped it right off an M4 or something, and it was profitable for a while, and then it's not. So cool. So that's that. But the funny thing is, sometimes the peso is a little slow, but I mean, the dollar can overwhelm the peso. Remember, the trade that I set up on every month is based on, you know, roughly $2.4 billion. But the US dollar can overwhelm 2.4 billion pretty easily. You still take the shot, right? Talk to like Wayne Gretzky, the greatest hockey player of all time, or Michael Jordan, the greatest basketball player of all time, right? You got to shoot if you're going to score. So anyways, I don't know why I have two crudes on here, but I think what this X was is me predicting last month's high and that it shouldn't go any higher, I think. Now, we wanted it to, or guesstimate, remember there's no reason for it, but I figured we'd be more or less in a 45-55 range. Doesn't mean it has to be, you know, those are just psych levels. But now we have new weeklies and new monthlies and all that kind of stuff. So, right, so we got to pay attention. Right, you wouldn't want to buy up there, even though, and then, you know, people get really excited about chasing price like this. And I think what we were talking about is even if it's taken off like that, it's not really what you're supposed to be doing. Right? The law of averages we often talk about and all that kind of stuff. Yeah. Yeah, and maybe it is a stop hunt where they find the pigs and slaughter them. So anyways, it's nice though to see that when I'm teaching you to be conservative and careful and thoughtful in your planning, and that when things break out and away from normal ranges, then you're taking on risk that is, you know, unnecessary. You know, you're standing on top of a wobbly ladder on your tippy toes to get one more apple. even though there's a good chance you could break your neck, right? Oh, but one more apple. Dude, you have a ton of apples. Why do you need one more apple? It's too high. Your ladder's too wobbly. No, no, no. I can get it. I can get it. All right. There you go, apple boy. 10,000 apples isn't enough. You got to get 10,001. All right. Looks like we're out of time, too. So let me give you the peace on earth. May the pips be with you. May our profits be above average stuff. And I'll see you tomorrow. We can do some more technical analysis then. Thank you so much for your time. Thank you for being a client to Traders Way. Have a wonderful trading day. Looks like we're going to have a great week. There's lots of the gears are well oiled. Let's say should be a really good trading week. Watch that Aussie, huh? Take care. Cheers.